can understand that a little bit better, we have with us Sanjay Kumar, the MD at IGL. It's a good time as any to get in a sense of whether they actually see volumes growing up and what really is the way ahead for IGL. Sanjay, great to have you on ET now. Thank you so much for taking the time out. You did a total volume of around 8.1 MMSCMD in the third quarter. How have been the volumes in the first 2 months of the fourth quarter?
So thanks for having me here, Aisha. And we have actually, we have increased our volume slightly over 8.1. That is the average that we had reported last quarter. Presently, we are clocking about 8.25 to 8.3 million cubic meter per day of volume. So the volume has been growing up. The reason being that the pricing has actually cooled down a bit. While we use more than 8 million cubic meter gas, about 75% of that gas comes from APM, non-APM pack. And the remaining is sourced from the market, whether it is our long-term contracts or the contracts from spot market or gas exchange. Now there the pricing has come down recently, and the pricing presently that we are looking at in these markets is about $14 approximately. So that's a big relief for the CGD companies like us who used to pay pricing in the excess of $30 only 6 months ago.
Also wanted to understand if you could just give us a breakup as to what kind of growth you're penciling in from older as well as newer areas, if you could just classify.
Yeah, so majority of the volume presently that we are marketing is actually in the areas around Delhi. So the new GAs that we have in Uttar Pradesh, Rajasthan and Haryana, we are commissioning major pipelines there in next 3 months. By June, we will be commissioning major steel pipelines, which will provide actual gas supply to these geographical areas, and the CNG stations would have online gas supply. Presently, the CNG station in these areas are catered by LCVs, commercial vehicles having cascades. So, which is not a very good model, not a very, optimum supply model for CNG stations. So once we commission these steel lines, we will see a lot of growth in new areas like Kanpur, Muzaffarnagar, then in Rajasthan, Ajmer, then Haryana. So we plan that we will have 1 million cubic meter growth from these areas in next financial year. That is by March 24 end. That is the estimates that we have at our end.
Mr. Kumar, morning. And the CNG price differential as well to diesel, that has nearly halved. Is there a slowdown in car conversion as well owing to the same? And what is the current conversion rate?
Depends on the operator of the geographical area. So for IGL, we have not increased our prices to that extent. We have maintained our prices at the approximate level of 79 rupees in Delhi for last 4-5 months. Now, if the prices are moderate, the conversion rates would continue. Our conversion rate in the month of January has actually increased. From 14,000, we have clocked 16,000 vehicle conversion in the month of January for our geographical areas, the 11 geographical areas that we have.
All right. And what part of your CNG volumes are sold to buses and how much to three-wheelers, and which are more likely to be converted to EV according to you or by regulatory intervention?
Yeah, so in 20% of our sale is to buses and to other autos, etc. Now, some part of that sale may be compromised because of EV buses. Buses are big CNG customer, and in order to manage this risk that we are facing, we are planning to get into a bigger way in EV also. And second thing is that we would, if we keep our price moderate, it will be slightly difficult for the decision makers to convert to EVs, because the cost factor is always there in the EVs. but that risk actually pertains to Delhi, which has the possibility of converting to EV, the buses converting to EV. The other areas that we are operating in, they may actually take more than 5 years to convert buses into EVs. That's our call.
So 5 years from now, what would be the core business of IGL? Will it be a gas company which also is using their outlets to give other additional services like EV charging, or you will remain a gas distribution company at heart?
We will be participating in EV business also. But Nikunj, the experts all around the world are talking about energy trilemma, which is affordability of energy, sustainability of energy, and energy security. Now, if energy security is not there, it will be a problem. Affordability is also very important. Now, if you look at the way things are panning out, most advanced countries would reduce their gas and oil consumption in coming 10-15 years by maybe 50% also. But countries like India, there the impact would not be so much. In fact, our gas consumption, the Indian gas consumption, is likely to peak in the year 2037 to 2040. So we would continue to grow from here to 2040. And if the gas consumption in the country continues to grow, IGL would continue to have larger part of their business from the gas business, and EV will be the second business that I see in 5 years from now.
Be able to incubate the EV business because that involves setting up of infrastructure, it involves setting up of charging stations, so infrastructure has to be invested first and the annuity starts later. Can you do it on the existing balance sheet with the existing cash flows?
We are debt free company, and we do not see any problem in that. Moreover, the EV business has come up with its own model. People are actually offering that annuity. They set up the charging facility, and they try and get some share of some percentage of revenue that comes from the charging business. That model is also very prevalent. We have come across that. Uh, for IGL, we are presently debt-free company. We don't foresee any such problems.
All right. We wish you all the best. Thank you so much for joining in and sharing with us an outlook on how things are shaping up. Just a quick glance at